Hi all. So today I'm going to discuss about a strategy using renko. So renko is a kind of a chart type or a candle type in which you can see boxes. So what I've done is I've just come here and instead of using a normal candlesticks I've used renko. So once you click renko you will find these boxes, and essentially what it does is it removes the excess noise. Okay, now there are obviously many different ways to make a renko, but generally what I like to do is I like to keep it based on the ATR, because if I do it, let's say 5 points or 10 points, that is very different for a trending market or a sideways market, right? So generally I like to keep it based on the ATR. So that's what I've done. I have based this on an ATR. So this box will be based on the ATR of that current day, and I am using on a 15 minutes time frame. Again, it doesn't really matter, but it depends basically what we are trying to do here, right? So generally why I use renko is to figure out support and resistance. So that's the main issue. I don't use the renko for direct trading. So what I would be doing, for example, is I will be creating my supports and resistance using renko. So that's what I'm going to do here. Let me. So as you can see, if we scroll a little on the left side, so I can see then there is one good support level which is here, or I can say it is between these two lines. So I can probably keep this, or I can even make a level a zone here. So this is one good support. Why I did was because I can see a lot of times renko is coming till here. Similarly, I can say that this can be a good level. Why? Because you can see that earlier this was acting as a support and now it is acting like a resistance. Let's go a little on the right side and then I'll tell you why I have added the other indicators. So the first thing that I've done, as you can see, the first thing I've done is I've tried to find out what is the major support and resistance for the last, let's say, 1 month, and I can also create similar level which is somewhere here, right, the high here, so that we know that there is some important thing that can happen once the market moves from here, right? So that's the first thing. So I have created a renko chart, then I have added my important levels, and these are the levels. Now how do we take a trade? So let's say we are at an important level, right? So let's say we are at an important level like this. Now this is the time at which we are going to see whether my RSI is overbought or oversold along with the stochastics RSI. Now why I have used two is because, as I said, renko, because it is removing the noise. A lot of times there might be a very big wick here, there might be a very big wick, but it will not get captured in renko. So it's very important for us to understand that because the wicks don't get captured, we have to use double confirmation, and that's why I've used RSI and stochastics RSI. Now I'm looking for a short trade here. I'm looking for a short entry here. Why? Because it is at an important level. I want both my RSI and the stochastics RSI to be in the overbought zone. And you can clearly see at this point of time, this was also above 70, almost above 70, almost 70 here. And this is obviously above the level, which is 80 in this case. So I can go for a selling trade here. But how will I go for a selling trade? Once I see the red brick. So once the red brick is formed, I will go to the normal chart. So let's see the price. The timing is about 14th August 3 p.m. So I will go here. This is the normal candlesticks chart on 14 August 3 p.m. and this is where, so you can see here that a trade I'm getting is here, which is the red candle. It's also a bearish engulfing happening here, and this is where I can go for a selling trade. So this is where I can go for a selling trade, and you can clearly see that the market actually fell down the next day. Also you can see here that RSI was not overbought here, right? But this was giving me a good signal. So this was one trade. Similarly, if you see here, you can see that as per my RSI, it wasn't giving me a trade. So I'll probably skip the trade. Because RSI did not really give me a good overbought zone here. So I will probably skip this trade. So this trade will get skipped, the second trade. Let's see here, right? So we are now at the bottom and I'm looking for a reversal trade again. Do we have a trade happening? Yes, we do, right? Because at this point of time, we can see that both RSI and the stochastics RSI is giving me my trade. So I will wait for a green candle. I will wait for the green candle, which is here at 18th August 11:30. So let me go to 18th August 11:30. Here it is, right? This is the one. So I'm going to take the trade here. At once the candle closes, I'm going to take the entry here, but I cannot put this as the stop loss. Also, please remember that you cannot put RSI as the stop loss, RSI low as the stop loss, because as I said, the wicks are not captured here. So this is only telling me what is the right time to take the entry, because it is clean. It's a very clean chart. So it is telling me the time to take the entry, but all the entries will be based on the normal candlestick chart only. So as we said, the entry will actually come at 11:30 18th August, which is here. So this is where I'm going to take the entry. This is my entry candle. I will put the stop loss as the previous swing low, which is here on the normal candlestick chart. So this is my stop loss, and as you can see that it's a very good move. It's an extremely good move. And in this, actually, as I told you, I'm not even looking at the RSI. So I can remove these. I can remove these because I only need the RSI on the renko chart where I'm getting the entry. So I've got the entry. This is a really good move. Let's check one more example. Okay, let's see this again. Now you will notice that at this point of time, it came to my resistance level, right? But at that point of time, it did not make a red candle. It did not make a red candle. So I will not go for a selling trade. I will not go for a selling trade on 24th August. But if you see here, right, if we go to our normal candlestick chart, 24th August, on the, as you can see, it was a big gap up. It was a big gap up. So what you will notice, this is the timing. So now you have to understand the time part also. If you see, all these candles are 9:15. All these candles are 9:15. So if you start from here, this is a 9:15 candle all the way till here. Why? Because it was a gap up. This is where I get the red candle at my next resistance level. So I can go for a selling trade here. I will go for a selling trade here. This becomes my selling trade. Why? Because my all the conditions are met. I am at a very strong resistance zone. RSI is above 70 and my stock RSI is more than 80. So I will go for a selling trade once the candle closes at 9:30. Once the candle closes at at 9:30, or I will look at here, which is somewhere here. So I'm going to go get the trade approximately here. I'm going to get the trade approximately here. This is where I will go for the selling trade with this as the stop loss. With this as a stop loss. So this is my entry. This is my stop loss. Again, the stop loss will be based on the normal candlesticks. So I've gone for my selling trade, and again, very good trade, right? Very good trade. Now, so I hope the entry is clear. So basically, we are doing analysis on the renko chart, figuring out what is my my resistance and support, using RSI and stochastic RSI to figure out the entry point. I mean the time. Then we go to the normal chart. We take the trade. We put the stop loss. And for your target, you can either trail it. So use any of the other concepts like trailing based on swing highs or swing lows, or you can have a 1:3 kind of a risk to reward, right? Also, one more thing you can use is you can use ATR based trailing, ATR based trailing. But the idea is that we are getting a very good entry here because renko is giving us a very good support resistance because it's removing all the noises. And the timing is very good, but you have to ensure that the entry actually comes using your normal candlestick chart only, not the renko chart. And put your stop loss based on the swing and go for the target with at least 1:3 or 1:4 risk to reward. You can again do the same in other different stocks also, doesn't really matter. It generally works out. So again, thank you very much, and I'll see you soon. Bye.